For more insight, let's bring in Stuart, global energy strategist at Piper Sandler. Thanks so much for joining us, Jan.
Anytime. How are you?
I'm well, thank you. I wonder if we can just start with this major swing in the price of oil today. It's been a drop of about 6% from where it was earlier midday trading after OPEC announced that small increase. So you can see there we're showing WTI on the screen, but this drop, we're now down about 4% on the day. It seemed to be because of this surprise in U.S. inventories jumping to more than 4 million barrels. I wonder, what did you make of that?
Yeah, we looked at the volatility today, and it's another day of really dramatic swings in the price. And they always look like catalysts, the same way that you do. We try to keep in mind the background to it all. The background to it all is that the market is very bearish inclined because the common narrative is that we are headed deep into a recession, and that will take down oil demand, and then prices will just be coming down just like that. So we're trading ahead of that a little bit. Today, even more bearish than the surprise upturn in inventories which are still in a downtrend. But anyway, this week we had a surprise upturn. But what was more bearish to the market was this notion that gasoline demand here in America is falling away. And we think that's a very mistaken notion based on very crooked numbers from that weekly data set.
Why do you think that those numbers aren't worth looking at?
Well, they are worth looking at because they're there, right? We look at everything that's there. But the way that they are computed leaves significant room for error. And they, for instance, this is to the facts, right? We are supposed to believe that in July, in the middle of the driving season, we're only using 8.6 million barrels a day. That would be down 500,000 barrels a day from May of this year. That would be below the COVID low of 2020. So we ask all the refiners, we ask all the retailers, we ask everybody that reported earnings this season. Every single one of them tells you that their sales are not down materially from even pre-COVID days. Some report record high sales. And if you have been around Long Island and seen those traffic jams, you'd believe that.
So you don't see the sort of demand destruction happening in the gasoline market then?
No, we don't. Now, there is suddenly more gasoline available. That is because in the last 6 weeks, refiners the world over have reacted to the margin signal and have began to up the output of gasoline. So there's more supply available. No question about that. And that is also visible in the inventory data, which are more reliable than the demand data.
So, I mean, that's interesting because U.S. President Biden, the White House senior advisor that we were just listening to as well, talking about how they've been able to bring gasoline prices down. And when you started talking about the recession factor here, bringing oil prices down, I was thinking, well, I don't know if you want to be taking credit for that part.
You know what? It is always difficult. And I have to tread very carefully here because I'm a guest in this country. I'm an immigrant. And I don't want to speak ill of spokespeople for the administration. And we realize how sadly politicized everything is. That said, it is a fact that the SPR releases, the Strategic Petroleum Reserve releases, have had a material impact on prices. There's a huge chunk of supply that was dumped into the market, no question. And the Biden administration can take full credit of that. I would hesitate to give them any credit for having achieved squat with regard to oil in Saudi Arabia. That whole notion that Saudi Arabian oil production is up in July, no, it wasn't. Exports were higher from a very strangely low level in the second quarter. The better question would be, why did Saudi Arabia export that little in Q2? Why have they only now normalized production? Or, put different, if President Biden was so successful in Saudi Arabia, why did OPEC choose to do absolutely nothing this morning?
Yeah, right? You're equating 100,000 barrels per day as absolutely nothing. I mean, I've heard other people talk about it similarly, being a rounding error, that sort of thing.
I was just trying to be polite. I've heard different terms for this as well, yeah.
So this increase then, or whatever you do want to call it, you don't think that that's going to have a material impact, John?
No, I mean, the OPEC increase came with an official communique, and the official communique said that the official communique said that the organization is acutely anxious about the severe lack of available supply. There is really no spare capacity, is the freely translated version of that OPEC communique. So the organization now is officially telling the world that it has hardly any spare capacity to help ease supply anxiety with.
Just quickly, Jan, what would you have wanted to hear from OPEC Plus in terms of, meeting the targets that they already have?
That would be a nice start. But no, I mean, we were not expecting to hear much of anything out of OPEC Plus because we've been arguing on your program as well that OPEC has no spare capacity left to give. So we all have to watch them, and we all have to watch them in the same way that we have to watch other politicians, because sometimes decisions come out of nowhere. But we weren't expecting anything out of OPEC this morning, and granted, we were surprised that we got 100,000 barrels a day. Whoopee.